Okay, looks like we're good. Hello everybody, welcome to the Trading Setup channel. My name is Niku, and today we're going to look at support and resistance, how to draw them properly, and we're also going to look at trend lines and channels, which is basically the same as support and resistance. And I'm going to show you guys why channels might become your new best friend. So hopefully the market plays along and we'll get some good examples. But yes, so I did this video yesterday as well. I'm redoing it today because I did not realize yesterday when I was doing this that my microphone was turned off. So whole video, no sound. Apologies for that. So yes, if you guys need to know anything, please feel free to ask questions in the live chat. I do have it open. I can see if I'll be able to see if you guys ask any questions. And if you're watching this later, leave some comments. I always read them, and hopefully we can address any questions you might have in a future video or a future live stream. So yes, remember we're going to be doing these live streams weekly from now on. So make sure to join us, bookmark the times, and yeah, hope to see all of you there. Let's get to the platform and have a look at support and resistance, how we can use it, how it helps us, and how to draw them properly. So the concept of support and resistance is an old one, and it's still valid because it works. People still use it simply because it works. Now we can't use it by itself. I'm going to show you guys one of my favorite indicators to combine with support and resistance. I'll do that in a minute, but first let's have a look and see if we can see what support and resistance is, and then also we're going to see if we're going to have a look at how to draw them properly. What's going on with my internet now? Let's just give this a minute. So it looks like my chart isn't loading. I'm just going to refresh this page quick and see what's going on. See if we can get anything in. There we go. It looks like we are sorted. No idea what happened there, but yeah. Okay, let's get to it. We can use support and resistance on any time frame. This is especially useful in longer time frames or higher time frames. I use this especially on 1 hour and 4 hour charts when I'm trading forex, and it's very useful. The thing is, most people don't know or understand how to use it properly or how to draw it properly. So I'm going to show you guys how we can get it in drawn properly first of all, and then I'm going to show you guys how you can use it as an early warning system, not to predict where you will get trades, but how to predict potential areas where you might get a trade from your setup. Remember, I've said this in so many videos, guys. Always remember, you cannot predict what price is going to do. I can't predict what price is going to do. It is impossible. Once you understand that you cannot predict it and stop trying to predict it, then you start understanding that it's fairly easy to simply follow what price is doing. And once you understand that and you build your strategies around that, your trading will change in a way that you can't even imagine. So a lot of new people is trying to predict what price is going to do, and it's a coin flip. At best, you've got 50-50 odds. So understand that. So we're going to approach it from this way. We cannot predict what price is going to do, but we're going to try and identify areas before price reaches those areas. We're going to try and identify potential areas where we might get entries. Doesn't mean we necessarily will, but we might. Okay, so you can be prepared and you don't get caught off guard if your strategy actually fires and gives you an entry. Okay, so This asset is not so nice. So support and resistance is basically the definition of a trend. A bullish trend would be the basic simple definition of a bullish trend will be price making higher lows and higher highs. The definition of a bearish trend will be price making lower lows and lower highs. That's the basic definition of a bullish or bearish trend. That's how you know you are in a bullish or bearish trend. You can simply look at price, and we can see clearly here that price is making lower lows, it's making lower highs, because this is the high here. Price came down, pulled back, made a lower high, continued its way down. So we are currently in a bearish trend on this asset. Although this is not a good looking asset, I want to find one where I can do a nice example. Just want to find one with a very clear example of support and resistance. It won't always be, what you call it, perfect. Quite often support and resistance areas are can be very sloppy, but in general they're not. And we shouldn't be waiting too long to find. It shouldn't take too long to find a decent asset with decent levels. Ooh, I want to come back to this later. And just as luck will have it, we are struggling to find something that's making beautiful support and resistance areas. A lot of examples, but I want a very nice example. There we go. Okay, so this should do fairly nicely. Okay, so as I mentioned, as I just explained the definitions of a trend, what happens is that every time, let's suppose you're in a bullish trend, every time that price makes a new high and pulls back, that new high or the last high that it formed becomes a resistance zone. And the same if you're going in a downwards trend, it becomes a support zone every time price makes a lower low and then pulls back. And so in this case, we can see that price was moving upwards here. Overall, the direction was upwards, and then it hit this area here. Now, a lot of times you will see people draw support and resistance lines like this. Let's just make this a little bit thicker. So people will draw a support and resistance line like this. Okay, I don't quite like to do this. The reason for this is that your support or your resistance area will always it's always an area, it's always a zone, it's never a single price. Very, very seldom will you see that it's a single price. So although this is not incorrect, I prefer to use a channel when I'm drawing my support and resistance, because that way I can draw the zone in. So let me show you guys this. We're going to draw this in. Just want to get it nice and level. There we go. So this will be my resistance zone. Let's get back. Okay, so this is my resistance zone. This whole area here is a resistance area for me right now. So what happened? Price was moving upwards and we were keeping track of the highs. And when price made this high and pulled back, we were able to draw this level in here. So we didn't need this level yet. We can simply draw it from the last high. We can draw in a zone like this, and that will be our potential resistance area. Same as when price is going down and starts going up again, we can draw areas in like this. So let's just do, I clicked on the wrong thing there. There we go. So that's the, and then we have a zone here. Now we can see all of a sudden that this should be more, just draw it a little bit smaller. We can see now that price is moving between these two zones at the moment. Does it mean that I'm going to take a sell trade as soon as it hits the resistance zone? Absolutely not. Does it mean I'm going to take a buy trade as soon as it hits the support zone? Absolutely not. But there is ways we can determine, and that's what we're going to dive into that as well. But there are ways we can determine whether we're going to get whether we can take an entry or not. So basically, your support and resistance is just drawn on the highs and the lows. Usually the most recent ones, and usually the most visible ones. You want to get, you want to really try and get the most visible and most logical support and resistance zones. The reason for that being is that that's what everybody else is going to see as well, and you're going to have traders start placing orders in those zones. Okay, so you want to get the most obvious ones. In this example here, these two are the most obvious ones at the moment. Okay, so this is, we've got our resistance zone, we've got our support zone, but how can we determine whether or not we're allowed to take an entry? So I'm going to show you guys this quick. One of my favorite ways is to simply add an RSI, but I'm just going to make a small visual change to it. And I'll show you why in a minute. Let me just finish setting this up. I'm not changing the values of the RSI. I'm just changing the way it's being displayed. There we go. Okay, so I prefer to use my RSI like this. For the most part, when I'm using the RSI, I completely ignore overbought and oversold levels. I very, very seldom use them. What I do use is the middle line. The RSI, you need to remember, is a momentum indicator. So while the RSI is running above the 50 line, we have bullish momentum, and while it's running below the 50 line, we have bearish momentum. So if you look at the RSI at its history, you will see that although oftentimes you will get areas where it's alternating around the 50 line, quite often you will see it goes into runs where it will stay above or stay below. Might not be the best example there, but quite often you're going to see this. And this is super useful for support and resistance. It's especially useful for channels, but we're going to dive into channels in a little bit later. But for the moment, the RSI is brilliant for this. So we can see that it tends to move like this. It will zigzag out of overbought and oversold, maybe, but it tends to stay away from the middle line. So when it's above, we have bullish momentum, and while it's below, we have bearish momentum. Keep that in mind. We're going to be using that quite a bit. Okay, so support and resistance zones. Let's see if I can find a decent example. Okay, so if we look at what price did here, we had this zone coming through here. Let me just draw this in. Let's change the color on this as well, so we don't get confused. Okay, so we had price reaching this area here and pulled back, and it hit this area twice. There we go. Let's do it like this. Okay, so it hit this area twice, and this became a resistance zone, and price pulled back quite a bit. So we got two hits, and then price dropped back from that zone. After a while, price broke through that zone. Now, quite often when support and resistance is broken, price does like to come back for a retest of the broken support or broken resistance. And we had exactly that happening here. Price broke through quite strongly, but 15 minutes after it broke, price started coming back, and it started to test this zone here. Now, if I look at what my RSI was doing when price tested this support zone here, we can see that we had bullish momentum, price came down, and the next candle pushed up quite a bit. So this candle rejected of the support area, and at the same time my RSI tested the 50 line but got rejected upwards as well. Now this, once this candle closed, that is where I start looking for buy entries. So I wait for the rejection. You don't trade take trades on the entries on this candle here. Do not take trades as soon as price hits support. Quite often you're going to see it just simply break through, or you get what we call fake breaks, something like this, where it doesn't really respect the support zone or the resistance zone. But if you get a clean rejection like this, just wait that extra candle or maybe 2 candles. It's going to save you, it's going to keep you out of bad trades. Don't rush it. If price hits the support area, that's fine. Let it hit. Wait and see what happens. Remember I said earlier, if you're taking entries on this candle, you're trying to predict that that price will bounce off the support. So you're trying to predict. If you wait for this candle, you wait for the rejection to take place, then you are following what price is doing. And you're going to see a lot of examples like this. If you did the same thing here, price hit the support. This candle is basically identical. These two candles, these two red candles that hit the support are basically identical. So if you tried to predict a bounce, this trade would have been successful. This trade would not have been. Okay, so you don't want to you want to minimize your losses, your bad trades. You want to try to avoid bad trades as much as possible. So wait for the rejection to take place first before you start entering. Confirm your rejection, and then using the RSI in this way, we can confirm that the RSI bounced as well, turned back upwards, didn't pierce the 50 line, and in this case here, it showed me that bullish momentum was conserved and price kept going up for a while. Right, same with this here. This wasn't a clean trade, so you wouldn't have had a trade opportunity, although you could have taken a buy on this candle, because we came down after the break, price came down, tested, pierced this zone here, and got pushed back all the way up past this previous candle's opening. So this clearly, this candle closed higher than this one. So there was a clear change in direction, a clear rejection. We are on a 5-minute chart, so you could have taken a 5-minute buy here. Would have been a good trade if you took the buy on the close here. Okay, alternatively, let me just mark this because I want to show you guys on the shorter time frames. Another possibility. So this was the test candle, that one there. Let's just make it a little bit thicker, and let's make this yellow. If we switch to a lower time frame, where was this? Okay, quite often, not always, but quite often, you will get a good reason to take an entry on the lower time frames. Once you've drawn in your support and resistance on a higher time frame, you can switch to a lower one, and it maybe find a reason to take a trade here as well. Okay, in this case, the RSI definitely did not play along. But whatever strategy you're using, if you get a move like this and you get a buy entry above the support, go with it. Chances are you're going to win it. Do not take buy entries after price has broken through support. This is something that I see people do quite often, and it almost always ends badly. Once price breaks through, you do not want to start looking for buy entries anymore. You want to look for sell entries. Maybe on a retrace you get a sell entry there or something, but look for reasons to buy when price is hitting, especially if you've drawn your support and resistance on a higher time frame. See if you can find a lower time frame and see if you can find a reason to take a buy trade of support, and exactly the same opposite reason, opposite thing when you're looking when price is hitting resistance. If it breaks through, obviously you're not going to go start looking for sell trades while price just after price just broke above resistance, above a resistance area. It's very high risk trades that you're taking, so just simply don't do it. Okay, let's go back to 5 minutes. Let's get this out of the way. Okay, so support and resistance carries over as well. I mentioned earlier that you use your most recent highs and lows, and that is, especially on the shorter time frames, that is the most efficient way to use this. Like we can see on here, we have trade opportunities coming up. Most likely, either price is going to do one of two things now. from this area here. It's either going to go up or it's going to go down. That's all it can do. It cannot do anything else. So we know we are caught in a kind of a channel. So price is either going to go up and hit the resistance area, and when it does, it can break through or get rejected. And the same thing, it could go down and hit support, and when it does, it can only be rejected or break through. So we now have areas where we can find potential trades. So this is super valuable. So when price hits, I can just put this assets in. Let's just get it in there. I could now put this asset in my hotbar, and I can go back to it quickly, keep an eye on it, because I know that from this area here, we have probably 20 to 30 minutes, maybe a little longer, before price hits either. It's halfway in between now. I don't know if price is going to go up or down from here, but it's going to do one of those two things that we know for a fact. We just don't know which one. So we can keep an eye on this. We have decent support and resistance. Price is in between it, and we can now wait to see what happens, and maybe we can find a trade there. Okay, so that's support and resistance. It's fairly simple. It takes some practice to draw in, but you can also use support and resistance from larger areas. So let me do an example of that quick. I'm going to put my chart on a 1 hour. Let's go to a 1 hour chart. Yeah. Very clear upwards trend. Might not be the best example, but let's use this as an example maybe. So we have a decent support resistance level here that was adhered to. It's exactly the same thing we did on the 5-minute chart just now. We have this area here where price got rejected, came back, tested again, and then got rejected, and afterwards it did break through. So let's just get that level. Okay, so afterwards it broke through. It made an attempt here. Technically this should be our zone. So price got to this point here. We didn't know this was a resistance zone when this happened, but price pulled back all the way. So we could draw, after that this has happened, we could have drawn this in, and then we could have kept an eye on this area, and we could have seen price hitting the resistance again, getting rejected, going back down, and it hit here again, got rejected, but finally pushed through, came back for the retest. So we had trade opportunities here as well. There was buy opportunities here, and then price went up. So I can use this area, although this is a massive area. It's not ideal. It's not the ideal example, but I can now use this area here as a support area as well. And if I scroll a bit down or scroll a bit back, we can see how this movement here, our price behaved here, and we could have had trade opportunities here as well. So support and resistance carries over. It doesn't mean just because it's broken that it's unusable anymore. A level sometimes persists over a long period of time, especially on the higher time frames. A level will persist for a very long time. A decent level, let me add that. I cannot simply draw a line in anywhere and expect the price to respect it when it comes back to it. But overall, your major support and resistance levels will be respected over time as well. So we could see, for example, price might in this situation, I think price is going to continue up for quite some time. We are in a massive upwards trend on the 1 hour, but we could see price leave this area here, break through this resistance, and just carry on for quite a while. And then maybe tomorrow it could come back to this level, and it might have difficulty breaking through this level again. And we'll have trade opportunities from the level that we draw in today. Okay, so keep that in mind. We have levels persist, and they could be used later on, but only the clear prominent levels that you find. Right, so let's have a look at channels quick. And I wanted to come back to this asset here because this looked really, really nice. Although now that I look at it, not so much. Okay, so channels are support and resistance as well. It's just they are not horizontal, they run diagonally. So let's draw this in here. Let me show you how we draw this as well. So we are in a downtrend. I explained the conditions for a downtrend and a bullish trend and a bearish trend earlier. So when we are in a bullish trend and price is making higher lows, once price makes a lower low, we need to be cautious because that could signal a reversal of the trend for us. Doesn't mean it will, but it could signal a reversal of the trend because now we are not in a bullish trend anymore technically. So when price starts making lower lows, we might be switching over to a bearish trend. And the same goes if we are in a bearish trend. As soon as price starts making higher highs and breaking those lower highs, then we might be switching to a bullish trend. And we've got an example of that here. So price was making, although this is not ideal movement, we can see that price was making lower lows consistently. It was making, lower highs, and it was making lower lows consistently. And then here we actually broke that pattern. Now, if I take this pattern here and I do it like that, and I put this on the bottom line, you have to wait for your second high. But once this occurs, you can draw a channel. You need 3 points to draw a channel. So we need 2 highs and 1 low to draw a channel. And I'm actually doing this the wrong way around. We need the bottom channel. Let's find a good example of this. Give me a second. Let's start at the top of this and excuse me. Let's see if I can find a really, really good example so I can convey the way we need to do it. Can check the history as well. Yeah, okay. So we're going to pretend that this was a downwards trend because this movement here technically is from here, this area here. So this area here is technically a bearish trend. Let's move it like that. This is technically a bearish trend because price is making lower lows, lower highs and lower lows. Okay, so we are in a bearish trend. What happens when we start making higher highs and higher lows? This is where we can draw in our channels. So when we are in a bearish trend switching over to bullish, we're going to look for 2 lows and 1 high. And when we are in a bullish trend, we're going to look for 2 highs and 1 low when we think we're switching over. So if I use this was the last low that formed, and now imagine price was around here at the moment. We didn't see this yet. Let's get rid of this as well. Okay, so price was coming down in a bearish trend, made the low, pushed up, made a new higher high. So this was our first warning sign. Price made a higher high in a bearish trend, so we could possibly have a switch. And then price came down, made a higher low. And let's imagine that price is somewhere here at the moment, because this is going to be the time when we actually draw in our channel. We need the 2 lows and the 1 high. So if I draw this channel on the low and on this low here, and I pull it to this high, this is what I want to do. Okay, so this is the way we're going to draw it once price gets roughly around here. But we're not going to leave it like that. We are simply going to extend it like this. Something like this. Yes. Okay, so now Before price even reached these three areas here, we already had a channel drawn a channel drawn on the chart, and we know now that these upper and lower limits are potential trade areas for us. So we could have had a sell trade here, we could have had a buy trade here, we could have had a buy trade there. In channels, the RSI is not ideal to use as confirmation, but let me show you guys another tool that's great for confirming entries in channels. One that I use often will be the ADX. So I'm just going to change the color here. I like the green and the red. Not changing the values, we can leave this on a default setting. Okay, so the ADX, I've made videos explaining how the ADX works. So if you're not familiar with the ADX, either go read up on it a bit or go watch one of the videos. The ADX is a really brilliant tool. Once you understand it and once you know how to use it, it's really a great tool. So we had a buy opportunity here. If you look at the ADX, you had a massive DI minus spike here, and my ADX itself was relatively low compared to the spike. Now, when this occurs on a channel upper or lower area, I go for a trade there. So in this case, it would have been a buy trade if your DI minus is your red line. If the DI minus spikes like this, it's usually signals a buy entry. Not by itself. Don't use the ADX by itself. Use it something else to confirm it for you, but this usually signifies a buy opportunity. Same goes for big DI plus spikes. If it's a green spike, let's see if we can find one. They don't occur too often. Really not too often. There's a high ADX by DI plus spike, just as an example. They usually signify a pullback. Okay, so doesn't necessarily always mean that price will pull back. If we look at this here, this wasn't a decent spike, but just to give you guys an example, the ADX went up here, started pulling back, but price just kept on going for a while before it started pulling back. So it doesn't necessarily mean that you will get a reversal. Here's a good example. It's a fairly decent DI spike. Price did pull back. 3 candles later, we did get a decent pullback, and after that, price simply continued up again. So this would have been a difficult trade. Using it by itself would have been quite difficult, but if you combine it with a channel or a support and resistance area, you can almost always, not always, but almost always, you will find that if you do get a decent DI spike, a lot of the times it will be on a important support or a resistance zone. So this is something that's worth taking note of. Okay, and another thing, channels work the same. Like I said, it's the same thing as support and resistance, only they're not drawn horizontally, they're drawn diagonally, as we can see here. So the same rules apply. Once a channel gets broken, we consider this as broken support now. Once a channel gets broken, it often comes back for a retest, and we might get a trade opportunity if it does. Okay, so what we're going to do is we're going to keep an eye on this now. Same way we did with the retests of support with the RSI. This is the area where you're going to use the RSI on the retests. You're going to use the RSI to find an entry. So what's going to happen is, again, remember, price can only do one of two things. It can either continue its way down or it can go up. There's nothing else price can do. So what we can see here is this. We might, not will, but we could see price do this. So maybe something like this. Let's make this a little bit thicker. Let's make make this a little bit thicker as well. We might see movement, something like this, and then finally go back down. This is a pattern you will often see after price has broken important major support and resistance areas. Okay, so if it's been this one is fairly decent, I should add. This is a fairly decent channel, so there is a fairly decent chance that we might see a pullback, especially because we've got this support zone here. Let's throw it in as well. This is a nice and fresh zone here, but it's a support zone nonetheless. Okay, but I'm going to be super cautious here. I'm not going to look for buys on the, if price hits this, I'm not going to be looking for buys. Two reasons. If you look at the RSI, we are well below the 50 line, and we have a lot of bearish momentum at the moment. So I'm not going to risk taking a buy trade on bearish momentum. We can also see that the DI plus is busy increasing, which is telling me that this is a sharp move at the moment. This could pull back or it could break through. I don't know, but I've got conflicting information at the moment. I've got my price just above a support line. Even worse, it's pushing back now. So I've got price just above the recent support, but I've got my RSI dropping lower. So telling me that the bearish momentum is increasing. Okay, so that's conflicting information. This is not the kind of trade I will take. But it would be nice if it actually bounces back, because I know I can then look for a sell entry here. So this is what we want. We want the RSI below the 50 line at the moment. If we see a pullback, if this setup plays out, this formation plays out, then we can, if price hits here and starts pulling back, gets rejected from the bottom of the trend line, then we can look at the RSI. And if the RSI remains bullish and gets rejected off the 50 line, this will be a great sell opportunity for us. Because we're on a 15-minute chart, a 5-minute chart, we might look at a 15-minute expiry. So this could be a trade opportunity for us. Will it happen? No idea. Okay, so I'm not predicting that it's going to happen. I know I'm saying this a lot, but we're not predicting that it will happen, but this is my trading plan for this asset. If this does happen, this is what I'm going to do. I'm not going to be caught off guard. If price hits this, I'm not going to be surprised if we see this moving upwards, especially if you're on even lower time frames like 1 minute and so. It's easy to get caught off guard. It's easy to miss a trade because you weren't paying attention and you saw something that happened too late. That happens a lot, especially with new traders. It's one of the things I hear a lot. People say, I saw this, but I missed it. I missed this. And this is how you can, how you not miss it. Okay, so this is the way you can identify areas where you could potentially find trade opportunities. Not necessarily will, but potentially could find trade opportunities. I use this a lot. It does kind of feel like you're predicting what's going to happen. In truth, you are waiting to see what happens and you are following whatever happens then. So we could have, if this setup plays out, I have a trade opportunity on my hands. If price simply pushes back into the channel, well, then I don't have a trade. Okay, so we'll need to wait and see what happens here. This is not going to play out in the next few minutes either, unfortunately, but this is how you can spot areas where you could get trades and you don't get off guard, don't get caught off guard, and you actually make the trades in time. You're ready, so as soon as that rejection takes place, you're in the trade and you don't miss time and you don't get in late. Okay, and you will see this on all time frames, 1 hour, 4 hour, even daily and weekly charts. You will see this on all time frames. I use this kind of setup in Forex often. There's the green, we tested, there's the green. coming in. So it looks like this might actually play out, or at least the first bit. We might see a pushback to this level here. Don't know if it's going to happen, but if it does, I'll be ready for it. Okay. So that's channels. And like I said, channels is one of my absolute favorite drawing tools because it allows me to find areas like this way before price even gets there. It doesn't always play out. Sometimes you'll get you'll draw your channel after your first 3 points, and then price will simply break out of it. That happens as well. So it's not law, but it does give it does actually often it happens often that price respects channels and support and resistance areas, especially the very obvious ones, because like I mentioned earlier, that's where most people those are the zones that most people see, and that's the zones where most people start putting in orders and buy orders or sell orders or whatever. And that's why when price hits, it starts turning back up. So this area here, for example, a lot of people would have put in buy orders, and this area here, a lot of people would have started putting in sell orders. And when there's a lot of sellers, price goes down, and when there's a lot of buyers, price goes up. So the more pertinent, the more logical, the more visible your zone support and resistance zones are, the higher the chance becomes that price might reject from there. You're still going to need confirmation though. Do not trade. I will never draw a channel and simply trade, take a sell trade when it hits the upper channel, upper side, or take a buy trade when it hits the lower side. Never do that. Use confirmation the way we discussed now. That's just some ways. There's other stuff you can use. You don't have to use exactly this, but get something else to confirm the trade for you. Okay. Hope that makes sense. I do think this is going to push up and retest this area here, and that's where we will get a sell trade. That's what we hope for. Hopefully we'll get a sell trade here and price just continues down, but we'll have to wait and see what happens. Okay, so, and again, you can get this, you'll find this on all time frames. There's our 2-pointer. Let's have a look at a few 1 hour charts just out of curiosity. We've got it. Kind of looks like we have a channel here on the 1 hour. Not quite. Let's get up here. Yeah. Okay. So this is not, because it doesn't really make sense. So this is not an ideal channel. Ooh. Okay, so just to get back quickly to how we draw channels. We have price doing something now. Okay, so we are in an upwards trend. Price is making higher highs and higher lows, but it looks like we might make a lower low soon. So I'm going to do a hypothetical quick. Oh, no. I'm just going to do a quick hypothetical and show you guys, hopefully just do a better example of how you draw your channels when they are forming. Suppose price does this now. Price goes down to that area there. And then after that, price pushes up like this. Something like this. Hypothetically. And then price comes down to wherever. Let's say here. If this happens, and you're going to see it, especially on 1 minute and 5 minute charts, you're going to see this happen a lot. When this happens, when you see this, we are in an upwards trend. Price is making higher highs and higher lows. As soon as we spot the lower low and then the next lower high, we've got our 3 points. And once this happens, we will simply draw in a channel. And you're going to use your most recent highs and you're going to use your most recent lows, and it's going to look something. It's going to look something. Mess this up now. Let's just make it a little bit smaller. it looks something like this. Okay, so once you have these first 3 points, you're set, you draw your channel in, and that way you know that once price reaches either the upper or lower channel after that, you have potential trade areas, and then you start looking at your indies to confirm whether we are doing what we're doing and whether or not you're going to take an entry. Okay, that's this is the way you're going to draw your channels in, and you're going to see moves like this often, especially if you're trading options 1 minute and 5 minute charts. You're going to see this a lot of the times. Okay, so guys, hopefully you guys understand or have a better understanding now of how we can use support and resistance areas and support and resistance zones. That's why we always talk about an area and a zone. Actually, let me just, before I go, let's just draw in this one channel here, because there might have been a trade opportunity. Just like that. Zoom in a little bit. Made it too long. Let's get you nice and level, and then get you on your right spot. There. And there. Okay, so look at that. Beautiful. We have a very nice support and resistance area here. Price went up to here, came all the way back, tested, failed, broke through, retested again, and eventually bounced, and now we're retesting again. Okay, and we could have trade opportunities here, but this is on a 1 hour chart, so you're going to look at 2 or 3 hour expiries. Unfortunately, the RSI is not playing along at the moment, but if we had something like this here, this would have been a good trade. If you waited for the rejection, you could have taken a 2 or 3 hour trade on this candle here. RSI came down, got rejected, turned back up. There was a great buy opportunity, especially since this candle cleared all these candles here. Okay, and just take some time. It's going to take some time to spot, for you to get used to spotting support and resistance like this. Practice. Don't just start drawing lines and start taking trade speeds. As with anything else, practice and test first a bit on a demo account, or if you're on your real account, just trade your normal strategy and do this while you're trading, but don't take trades off this until you start getting the hang of where to look for support and resistance areas. Okay, so that's support and resistance. I hope you guys have a better understanding. I hope I did a good enough job explaining to you guys how we can use this in trading, how to use it effectively for that matter. And yeah, that's it. I'll see you guys next week in the next stream, and we'll be doing some other topics. So yes, have a great weekend, have a great week. See you guys soon, and that's it from me. Cheers.